which is extreme, but I love the idea that, wealth is really being able to not just purchase things to have them, but purchasing, having the financial freedom to really do and act in the ways that you care about the most. So that's wealth to me.
Welcome, everybody, back to another exciting show of the About That Wallet podcast, where we help you build strong financial habits. So let's prepare for an enlightening episode of the About That Wallet as we sit down with Kylelane and her co-founder, Ben, to unravel the myths surrounding sustainable investing. With their extensive experience in the field, Kylelane and Ben debunk the misconceptions that sustainable investing doesn't generate returns and challenge the notion that it's merely woke investing. Tune in to gain valuable insights and practical guidance on making your first sustainable investment all from the dynamic duo behind the Till Investments and the authors of Sustainable Investing and ESG Starter Kit. How you guys doing today?
We're doing great. Thanks for the lovely intro. I always like being called dynamic.
So let's go and dive right into it. What in the world is ESG?
So ESG is a name that stands for, it's a three-letter acronym that stands for Environmental, Social, and Governance Investing. And there's a lot of different perspectives about what ESG could be or interpretations about what it means. But ultimately what it is it's three areas of non-financial data that sort of professional investors feel like are really relevant to the way that companies perform and relevant to the way that they operate. And so the how sustainable they can be over time. So if you are a business, you may only be focused on, financial matters in your bottom line, but your use of fossil fuels or alternative investments has a big impact on the risk profile of your business. Your ability to think about social aspects of your workforce, very important to the sustainability of your business. And good governance, of course, is very important to the sustainability of your business. So these are three issues that really play into, is this a good business for the long haul?
That's a good question. Is it really? Because a lot of times I believe during 2020, when this whole thing came about, far as like racial injustice was pretty much a big deal. One of the things that a lot of people were looking at was, what do their portfolios look like and what companies are they investing in? And I believe some people were actually trying to figure out how can they change their portfolio where it does not impact jails, because some jails are actually traded now. So how to actually take another look or a different approach into their investment portfolio. Do you guys have any suggestions on that?
Yeah. So, first, in terms of like what ESG is, Kyle's answer was what is it for business? But what is it for individuals? It's an opportunity. It's an opportunity to do exactly the sorts of things that you're talking about, right? An opportunity to invest in a way that is meaningful to you and that aligns with your values. And the example you just brought up about not wanting to invest in private prisons is a great one. And there are tools out there that you can use. There's a group called As You Sow that has a website out there where you can see if your fund is invested in fossil fuels, if they're invested in weapons, if they're invested in private prisons, if they're invested in all sorts of things, right? So one of the great things about ESG is that, 5 or 10 years ago, that was not a possibility. And now it is, right? Another one to know about is there is an NAACP ETF. Oh. Right? Yeah, there sure is. So first of all, I'm not making any investment recommendations here, and I am not, vouching that this fund is going to make you the monopoly man in 3 years. But it is an ETF put out by a company called Impact Shares, and they do, in fact, divest from private prisons, but also other industries that are negative for minorities, such as payday loan companies and things like that. And they also, when they look at a company, they look at things like their diversity programs and their supplier diversity standards and their board diversity, right? So I'm not here saying that this is like the one for you, right? But what I am saying is that these options are now out there and they're to be found. And whatever you think about ESG, and there's plenty of people who are very anti-ESG, but for the individuals, what this is a choice, is an option. And that to me is really exciting.
Well, how could you be anti-ESG? It makes sense.
Yeah,
Oh boy.
it certainly makes sense to me. And here's the, I think, really important point. It makes sense to business leaders. So there is an anti-ESG backlash out there. It's sort of being driven by the political sphere and by sort of a handful of big donors in the political sphere who are kind of opposed to change of any kind, right? That is what it is. But if you're looking at large businesses, a majority of, this is some data that I recently discovered, a majority of S&P 500 CEOs and C-suite executives now have their compensation tied in some way to ESG issues. A large percentage of, like, the largest companies in the world are fully cognizant that they have to think about running their businesses this way, not just because they want to appeal to a certain audience of investors, but because they are concerned about the sustainability of their business as well. And these factors really do have an impact on their ability to survive and thrive in the coming years.
And your question about how can you be against ESG? Well, it's the same people who are against racial justice, right? Those people are out there, right? They are going to call this thing woke and they are going to go at it, right? They are loud. They're not necessarily right.
Yeah. So, I mean, we can hear these things and some people's like, all right, now that we have a cool understanding of what ESG is, how do they start making their adjustments in their portfolio accurately?
So go ahead, Kyle, you can go.
Well, I'll get it started.
Okay.
So we put our book out, and we put a lot of thought into, like, how do you break this down to make it clear for people what steps will lead you down this path. The starting point. There's literally hundreds of these kinds of funds out there. So you could sit there and examine all hundreds of these funds and try to find the right thing for you. But we think a better starting point is to really look at yourself. When you talk to advisors, financial advisors, what they often do is ask you, present you with a questionnaire like, what kind of causes are you most interested in, right? Are you about gender lens investing or climate change? What are the causes that you care about? That's a valuable question. But we think that there is a second question that often doesn't get asked, which is, what's your fighting style? The fighting style is sort of our concept about, like, if you are someone who embraces change or wants to look for an improvement in the way that you utilize your money, how do you like to fight for that kind of change? Are you someone who just wants to avoid the bad actors? Are you someone who wants to look for the good actors? Or are you somebody who likes to get in there and mix it up with all the actors and try to make them all understand your point of view? We call these avoiding, rewarding, and influencing, right? And we find that most people kind of intuitively are drawn to one of those strategies or another, one of those fighting styles. Those fighting styles have a correlation in the way that investment strategies try to apply their ESG concepts, so that it's really helpful to understand what you care about and what your fighting style is, because that very quickly narrows that list of hundreds of investment options down to a handful of options that are much more attuned with what you want to do.
Yeah, and just to add on to that, I mean, the other thing that we say is, make the easy step first, right? So start with the platform that you're on. If you're on Fidelity, if you're on Vanguard, if you're on whatever one of them, start there. Like, let's say, for example, you heard my excellent sales pitch for the NAACP ETF and we're totally sold. And that's the one for me. Right. Go to your platform, see if it's there. If it's there, great. Make that choice. If it's not, see what else is available on your platform. Use that fighting style concept. If you say, you know what, I just want to divest from the bad guys, simple, passive, ETF, whatever, then there is likely to be that on your platform. Or if you're really motivated and you say, no, I got to have my NAACP fund, I'm going to go find a platform where it is and move my money over there. That's great too, right? For us, the most important thing is to act, right? And acknowledge that don't let the perfect get in the way of the good. And you're not making a forever decision, right? You can change your mind in a couple of months and no one's going to point at you and laugh.
That makes sense. Because one of the things, like, we already can see the money in the market right now. And some people are afraid that things are going to drop. Obviously, looking at the big market, S&P 500 side of the house. But obviously, there are individual stocks, and a lot of people suggest not to do individual stocks, but mostly focus on mostly ETFs and mutual funds and so forth. Are you guys, you can take one or the other, pro mutual or ETFs, or mostly individual?
We're definitely on the mutual fund and ETF side. And the reason that I say that is that for a lot of people who want to invest this way, one of the big challenges is the information overload, right? There's a lot of information overload. If you are looking at individual stocks, the information overload when it comes to ESG becomes really problematic, because every company, there's no really great standards right now about how this kind of ESG data is reported. So every company is going to tell you a slightly different story, and it's very difficult to have the resources you need to see through those stories and see what's real and what's not. Whereas mutual funds have staffs of people that set a strategy, and then they are able to kind of go through all that individual company data and see if it fits the strategy or not. And then all you have to do is evaluate the fund or the ETF, and is that strategy right for you? And that's a much simpler task than trying to understand all the different data from all the different individual companies.
Now that we got pretty much in the weeds with ESG, I want to talk about some of these adversities that you kind of overcame just getting into ESG. Like, because obviously you guys didn't just wake up and be like, ESG is the way to go. So how did you guys get started with that?
Well, so, we have our background is doing communications work for the investment industry. And most of that work is being done with asset managers. And we, in the course of doing that work, were, I would say, frustrated with the level of quality of the communications that were being put out about these funds. Talking about a large cap growth fund is very different from talking about an ESG fund, where the devil is in the details with these funds. You've got to communicate what it is that you are doing in your strategy, because it's not going to be clear to people right off the bat. And so this was really born out of we need to help close the gap here, because what these companies are saying, what the people need, are two different things. And an additional huge impediment has been greenwashing. Greenwashing done by companies, and then also greenwashing done by fund companies. I mean, if you look in the news in the right places, you'll see lots of fund companies getting big fines for doing greenwashing and saying, hey, this is an ESG fund, but not really making it an ESG fund. And so that's a huge impediment, and it's a huge part of why we're here, because we want to help people understand that those impediments are there, but also have the confidence to identify them and move away from them, right? So when we talk about greenwashing, we say this is a do what you say and say what you do thing, right? Is it clear based on what the fund manager is telling you? Is it clear that they are telling you what they do? And then is it clear that they actually are doing the things that they say? And, just by answering those two very simple questions, and it doesn't have to be at a, super detailed level. But just by asking and answering those two questions, you can really get yourself out of a lot of potential greenwashing funds.
Nice.
And I'll just say, just in the background, that Ben and I are both sustainable investors ourselves. And it was a learning process for us. And that we work in the investment industry, as communications people. So it's not like we were unfamiliar with what was out there. But thinking through how you go about making these choices, it's, sustainable investing, it's a very different, it's very similar to just, traditional models of investing, but there's enough that's different about it that you really have to kind of get comfortable with some change. And so we put a lot of our own thought into how do we do that better so that we could think and talk to people about how to do this the right way.
Nice. In this segment, I usually like to talk about a little bit about childhood. So what was your first fear of money?
Our first fear of money?
Yes.
I'll tell you mine. My biggest fear about money growing up was that it would dominate my life. And I say that because, I grew up in a family that was not, we weren't poverty stricken, but we were lower middle class, right? So money was a constant source of stress and worry and fighting and conversation and anxiety. And I just hated that. I hated that so much of our time and our family dynamic was sort of built around the anxieties that money produced, right? So for me, it really was that was the biggest fear, that I would never be able to kind of get past that.
Nice.
Yeah, for me, it was a little bit more bigger picture. So in our family growing up, we didn't really talk about money very much. We could either afford the thing or we couldn't afford the thing. And next, right? For me, when I really first started having fear about money, it was when I was becoming more aware of the news. And, I would hear on the radio when we were driving with my parents in the car about a recession, or they were hearing about layoffs, or they were hearing about inflation rates and all this very scary things that I didn't know and didn't understand. And I was afraid that they were going to affect our family while also having no idea what in the world they were talking about. Right. But that was the first time that I was like, oh, I got to be a little bit worried about this sort of stuff.
Yeah, and that's one of the tough things, because it kind of drives us a little bit. And that's why I was wondering, what drove you to now to the ESG side of the house? Obviously, there's a lot of things that happen and how you guys met and so forth. We're not going to get into that. That's not those kind of shows. But let's talk about the futures a little bit, because we talked about the past. Now let's talk about the future. What habits or skills that you feel that will take you guys to the next level?
So I mentioned earlier that we're sustainable investors ourselves, and it was part of this business that we're running is the journey for ourselves and how we're learning to be better at this. And so, for me, a big piece of what we're doing is we're testing waters. My first sustainable investment was, I had a retirement plan that had an international fund in it. And the company had an ESG version of that international fund, and I moved to that, right? And that was pretty modest as a first step, but it was a really necessary first step for me to try to get a better feel for what's different about this ESG investing, and what can I learn about this that will help me make the next decision. So that's kind of the direction I've been going in.
Before we started recording, we were talking a little bit about that weird spot in between your personal finance journey of when you're getting out of debt and when you have enough money that it's like, oh, maybe I should talk to a financial advisor, or maybe I need to do something or other and get some real investment advice, right? And in that gap are a ton of millennials and Gen Z. And they, according to surveys, love ESG when they hear about it and when they understand how to do it. The challenge is that none of them hear about it because they're not talking to advisors. They're not reading the Wall Street Journal like a normal person, right? And they don't know how to do it. So my future, I'm very focused on how do we find those people and give them something that they can use so that they can act on their desire for sustainable investment, for values-based investment. There's a ton of people out there who invest in that NAACP fund if they just knew it existed and knew that they could access it. So that's, in my future, those are the big questions that I'm trying to answer and trying to enable.
Nice. And so we mentioned we've been talking all around the book, but let's take a quick look at the book. So what separates your book from the rest of them? Because there's a lot of books out there about sustainable investing, but what separates yours from the rest?
Go ahead, Kyle.
Well, I think it's right there in the title. It's a starter kit for everyday investors. And I mean both of those pieces. And we took a lot of time to figure out what the title of the book should be. It's kind of funny how you spend all this time writing stuff and then you have these endless debates over the smallest things. But it was important that we kind of put all those concepts in there because this is really about how you get started. Unfortunately, I think there's a lot of proponents of sustainability out there, and I have great respect for all the work that they're doing. But it's so easy for this conversation to get technical and complex and convoluted really fast. Right? Nobody intends for that to happen, but it just happens because when you're talking about the investment world and you're talking about data and data concepts and all that, it gets technical. And that doesn't help anybody. That's a huge challenge. And unfortunately, the people that you would hope would be there to help you deal with that challenge, like investment advisors or investment companies, they really don't help by making things clear and understandable. So that was our mission. Like, can we create an explanation that opens a door for the people that Ben was talking about, for those millennials and Gen Zs and folks that are kind of in that, we want to build in a new direction and make it understandable for them to make that first choice. Because once you make that first choice, I believe you're going to be kind of enthusiastic about that choice, and that will propel you to keep going.
I will do a podcasting best practice and hold something up for the camera. But the important thing for us, this is a short book. It is not a tome, right? And you can get through it in an hour or two, and you're not going to be overwhelmed with data and overwhelmed with technical. And I will just point out also that in the back, we will detail some of these funds. We're going to talk about what Vanguard offers. We're going to talk about what Fidelity offers. We're going to tell you about some of these funds like the NAACP fund, but also like women's leadership funds and gender diversity funds and clean energy funds and vegan climate funds, right? So we're going to teach you how to do it. And we're also going to help you take these this huge number of options and whittle it down to a few that you can say, okay, here's my starting point. And what we hope is that it's digestible and actionable more than anything else.
Nice. There was something that came up in my research called an ESG score. Can you guys talk about that right quick?
Oh boy. Are you trying to end this sometime soon?
Oh, I'm sorry.
So here's what I'll say. So the best way to think about an ESG score is to think about a company. Right. Okay. And the company that we used as an example for this all the time is Tesla. Right. So Tesla, on the one hand, has a very strong product from an environmental standpoint. Right. Electric cars. That's great. However, the way that they make them, they get in trouble with the EPA. They get all these fines. They have all sort of labor strife and union strife and diversity strife. And from a governance perspective, boy, are they a challenge, right? They've got this one guy who is completely unchecked and can just make completely irrational decisions all the time. So how do you come up with a score for that? And the answer is it's really hard, right? So there are ratings agencies out there, and they will give a Tesla score. Sometimes they decide that Tesla's pretty good. Sometimes they decide that Tesla doesn't cut it, right? Oh, and that makes Elon Musk very mad when they don't pass muster there, right? And so for us, the scores are okay, but what's more important is, well, how did you get to the score, right? When you see that, a company is AAA rated on ESG, that doesn't matter as much to me as, okay, well, what makes you think that they're so great? Right. I think that with a lot of scores, you can get this false sense of complexity and this false sense of, oh, well, this is a science, when it's an art as much as a science. So the short answer is it's complicated. The long answer is everything I just said.
Okay. Nice.
I just want to, like, one of the reasons that we focus on giving people a starting point and allowing people to think about where that can go in the future is that ESG data is not standardized at this point. There's no there's no box you can check to say, this is a good ESG company, this is a bad ESG company. So, when the data is a little bit all over the place, the scores can give you a sense for what you're getting there. But the important thing in our perspective is, do the best you can with what's out there now, because that's what provides these companies with motivation to achieve those standards, to make the data better. So it's a long game.
Awesome. All right. So y'all ready for the final 4 questions?
Yes, sir.
Question number 1. What does wealth mean to you?
I went to a conference a few years ago, and there was a speaker there that spoke to, wealth is doing the things that you love to do in as extravagant a manner as you can, right? And in order to make that possible, you've got to not spend money on things that you don't really care about that much. So if you are a lover of Italian food, go have Italian food in Italy. Go to the finest restaurant in Italy. If you and you can afford that, maybe if you decide that you're not much of a car person, so you spend as little as possible on the junkiest used car as you can, which is extreme. But I love the idea of that. Wealth is really being able to not just purchase things to have them, but purchasing, having the financial freedom to really do and act in the ways that you care about the most. So that's wealth to me.
Wealth to me is impact potential. Wealth to me is, here is the power that I have from a financial standpoint to do something in the world, whether that is something for myself or for somebody else. And that's really the way that I think about it, is here is what I have to either make my world a better place, or the world a better place, or somebody else's world a better place. And it's potential to do that is what I look at wealth as.
Nice. Number 2, what was your worst money mistake?
Having a child. You can edit that out, right?
Oh, we gotta keep that in there.
That's fine.
Kylelane?
When I think back on like money mistakes I've made, it's never about the things that I spent money on that I didn't get value out of or what have you. It's always about the opportunities that I missed, right? It's always about like, oh, I could have invested in this company and gotten some value out of that. I could have put money behind this effort in my community or whatever, and I didn't, and I wish that I had, so, and I think what that sort of says is that I think that comes from a very honest place. Like it's what I love Ben's answer to your last question, because I do think that, money is a lot about the opportunities that it can kind of create for you. And so, like being able to confidently say, this is something I care about, and I'm going to put my money where my mouth is that's really the best feeling. So missing those opportunities is always the ones that I'm saddest about the most.
I think my more realistic answer was that I got into sustainable investing much later than I should have. I was very involved with this whole movement. It was corporate social responsibility, and very interested in it and very into it. And I do wish that I had thought about money in this way at that time.
It's a good way to clean it up. I got you.
Yeah, there you go. You can use both, whatever.
Too late. Too late. Clip that, friend, and email that to me so I can.
Yeah. Number 3, what is your favorite financial or non-financial book?
You mean besides our own?
If you want to do your own, that's fine.
Oh boy, favorite financial or non-financial book.
So this is a little bit old school, but Peter Lynch, who was the founder of Fidelity, he wrote his sort of manifesto. I can't even remember the name of the book really, but what I remember about that was he talked a lot at that time, that was in the 1980s, about invest in what you know, right? Like his concept of like, investing in alignment with your values was, invest in things that you are familiar with, that you see every day, and that you have some ability to develop an opinion about the business. And I think in a lot of ways we've lost that. We've lost that sense of connection between what businesses are doing and the impact that it has on our lives. I think there's a lot of lack of awareness that exists right now. So I think about that book quite often. I think about his message quite often, because I think that's what people want to do. People want to be able to, if you've got money in the world and you're going to invest it, you want to invest in things that they understand and that they have some appreciation for. And it's really, I think, a very simple notion.
I would have to say The Big Short, Michael Lewis. It's all about the financial crisis, and it really confirmed a lot of what I thought about the financial industry and the investment industry, and that, and the dangers of trying to create something out of nothing, and the dangers of trying to pull the wool over people's eyes, and the importance, therefore, of knowing what you're investing in. Right. And that all these people, even these really highly paid executives, didn't really understand what they were investing in. And I take that to be a lesson for myself, even at the much smaller scale that I'm investing, that I want to know and understand what I'm investing in. And if somebody's trying to put one over on me, I can't let that happen. Right. I need to have confidence in what I'm putting my money into.
I have to give you another one, which is a book about writing. The best book about writing I've ever read is called Clear and Simple is the Truth. And it is it's almost like a personal mantra, because I am a communications professional. I do a lot of writing. So no book has helped me express myself in writing better than Clear and Simple is the Truth.
Yeah, tell that to ChatGPT.
So true. The final 4th question, which is, what is your favorite dish to make?
So we are a Hanukkah family, and I make a mean latke, I got to tell you right now. That is, I think, my favorite thing to make every year. If I get a chance to make it twice in a year, even better. It stinks up the house for a good long while, but that is a nice odor to have around. I'm going to go with latkes.
Okay.
Good call. No, I think for me it would probably have to be a spinach pizza. It's a kind of It's more of a casserole than it is a pizza, but it has all the ingredients of pizza with a lot of spinach and a lot of cheese, and I just love spinach and cheese.
Let's give you a quiche.
There you go.
Nice.
Perfect.
All right. The last question of the show, which is, where could people find out more about you?
Pillinvestors.com is where you're going to get absolutely everything about us. You'll have links to our book. You'll have links to our socials. You'll have links to a lot of really good educational content. If you want to look for us on Amazon, we're on Amazon. Barnes & Noble, we're on there too. We're on LinkedIn. There's a bunch of places to interact with us, but I would start at tillinvestors.com.
Awesome.
And on the About That Wallet podcast, of course.
Of course.
Of course.
So thank you both for coming through the About That Wallet podcast show as we are really getting into the investment side of the house. So if any of you actually got any value out of this particular episode, even if it was just one sentence, one story, one bad financial mistake, it's worth sharing to another person, because we got to get this information out there and actually help each other and have a sustainable investment, not just for yourself, but for the world. All right, everybody. Thank you so much for coming through. Y'all have a good day.
Thank you.